Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 44 of the Forex market review. Before we progress, I'd just like to thank everybody out there for following the videos that we send out at Sain Investment Solutions. And just to let you know that today's the day or the week that we decided to send out these free videos so we can help as many people as possible. So I'm glad people are jumping online and watching these videos and hopefully getting an understanding of how to trade the Forex exchange market, why we use risk versus reward, and some opportunities of using Fibonacci retracement expansions and identifying support and resistance areas to try to make the best judgment calls that we can make. And hopefully we have the edge to deliver results and win more than we lose and become successful in what we love to do. So what we're going to do now is, after that thank you, is just look at two successful trades we had last week on the Aussie Stock Exchange and also the Uso USD oil trade, and a possible setup on the USD Yen short position. Let's jump to the charts. So the first chart we're going to start on today is the Aussie 200 or the ASX 200, which is the top 200 shares in Australia. So what we saw a couple of weeks ago when we looking at this opportunity, we were mentioning that this is possibly a wave 3 down here. We saw the first large AO. We saw it step back higher, hit some resistance areas around here, and then we're looking at shorting it, with the first opportunity shorting it down to this weekly 200 EMA line. As you can see, it's hit that right now. Then we dropped down to the daily chart, and what we saw was a head and shoulders pattern. So over here we had our left shoulder, then we had our head in the middle, and then we had our right shoulder on the right hand side. So what that just meant to us, that it looks like we're possibly going to have a push down lower. Now really this neckline down here has to break before we probably fall down to these levels down here, but there's still a setup occurring around these levels. Then drop down to the 4-hour chart, and what the first thing we wanted to do is identify divergence, which we had the higher high in price with the lower AO. And here we had our higher high in price. It was only just higher, but still confirmed. And then we had our low in the AO, and it came back below the zero line and gave a nice lower low. Then this DSR resistance indicator appeared, giving us some indication it could be going lower. We then drop down to the 1-hour chart, and what we're looking for is a wave cycle. So we had 1 up for 2, down for 3, and then as it came back up for 2 and then broke this 1-hour 200 EMA line, that was the selling opportunity around there. So whether or not you got on this candle here roughly, and you put your stop somewhere up here at about 60 pips, you know, you down here you made 140. So you easily made your 1 for 2 risk reward, which is what delivered on our portfolio. And if you hold the trade longer, you'd probably be coming up to 1 to 3 risk reward. The reason why I decided to get out, because we made our 1 to 2 and I started to see this pullback here, I wasn't quite sure if this was just going to be a pullback for wave 4 down for 5, or whether or not it was going to be an unfinished 5 and push back higher. So I just exited my trade based on the rules that I have set in place. However, looking at this, this is definitely 3 up for 4, down for 5. And where do we think it's going to go? Well, if we use our Fibonacci expansion tool, if you're still in the trade, just go from the highs to the lows and then back up to the highs for your wave 3. And then you'll just look for your Fib expansion levels. So the first place of resistance is going to be about this level here, and with the second one down here. But because it matches up with this DSR zone, I definitely would be getting out somewhere within these two Fibonacci areas. Now we also had the Uso USD trade. Here we had a large AO on the weekly time frame, down for 3, up for 4, down for 5. Then we had our push back higher. So normally you like to see an A, B, C motion. We then jump down to the daily chart to see what we could see there. And here we could see it stepping back up and hitting this daily DSR zone here. So roughly around this area here, in between here, was an opportunity to sell it. Then what I wanted to see is divergence. It's going to drop down to the 4-hour chart where we like to see the divergence first, and which is mandatory based on my rules. So obviously use your own rules and follow your own trading plan. This is just general advice only. And we see the higher high in price with the lower AO, clear divergence because it's come back below the line here before it's come back up. And then we've seen it push back lower. So this is probably all of wave 3 on the 4-hour chart. And it's possibly going to be pushing back higher soon. We're starting to see the stochastic in the oversold position. But our entry was jumping back to the 1-hour chart. We wanted to see it push down, hit this 200 EMA line, bounced around a couple of times, pushed through. Now, whether or not you entered the market here and you decided to put about 180 pips stop loss, or whether or not you allowed it to push back up again, which I did, and then finally push back lower, and then putting a stop loss around 130 pips. But definitely you've got at least 300 pips down to these lows here. So we're risking 150 to make 300. So here's delivered for us. This now looks like the largest AO, which possibly could be wave 3. So this could be 1 up for 2 and down for 3. So therefore it could push back higher a little bit before its final move back lower. And where do we think it's going to go? Well, the lowest we think it's going to go is down to this DSR support area down here in the green. And based on the daily time frame, there is a daily 200 EMA line here. So if you were looking and you're in the money and you're looking getting out, you're probably looking at these levels around here. Or if you've made some money and you're definitely well within 1-to-1 risk to reward, look at bringing your stop loss to break even would be a good suggestion. Now, the last trade we're looking at setting up is the USD Yen. On a weekly time frame, we have our wave set up again. We have our wave 1 coming back down to the bottoms here. Then we have our push back higher for wave 2 all the way up to here. Wave 2 we like to see come back to the minimum of 61.8%. I'll just zoom in. We can see it's 61.8 is here. It's came back to 78.6. But wave 2 can come anywhere up until the 100% level, but it just can't break the highs of wave 1, otherwise it's then discontinued. And because wave 2 is hard to identify sometimes, we really look for this large AO. And once we've identified that, then we know we're onto wave 3. So we then grab our Fibonacci tool, go from the start of wave 3 to the end. We don't know this is the end until this comes back to the 0 line. So it's not back just yet, and it's likely we'll step up and hit the 38.2 in this weekly 200 EMA resistance zone, and that's where I think it will be for wave 4, ready for wave 5 lower. So if we drop down to the daily time frame, we can start to see it's also pushing up. So I'd probably like to see it push up to these levels if possible. But if not, it's hit this daily DSR zone right about here. So really, if I can see it push down through this DSR zone and maybe retest it, then I'd be looking at an entry. What do we have on the 4-hour? As per my rules, I like to see some divergence with a higher high in price, which we have, followed by our lower AO. And here's our lower AO. Clear divergence for me, which comes back to 0 line before it goes back up again. There's a higher high in price, the low AO. It's likely to probably hit this 4-hour 200 EMA line before pushing back higher. So that would meet my criteria of breaking through this DSR zone, coming back, retesting it. Here I can see a wave 1 up for 2, down for 3. So it's likely this is wave 3. Very much this could be 1, 2, 3 here. So it doesn't really matter where you put it, but I really need to see this AO come back to the 0 line. And say it comes down to those levels there, I then want to see a pullback to roughly 50%. And this 50% line, if I just draw a horizontal line in, it's going to match up with this top of this DSR zone. And by the time this rebounds, this 200 EMA is likely to come to push back lower. So if I can see it step up into this area up here, I'm going to be looking for a selling opportunity personally myself because it meets my criteria. If I can look at there selling it, we could probably be looking at maybe 100 pip stop loss maximum. You might want to be a bit more aggressive. Maybe you want a 50 to 60 pip stop loss. But before you make the judgment call where to put it, always use your Fibonacci expansion tool. And you probably want to go from the highs to the lows. If we choose highs and lows are roughly there, it's going to show a zone there and a zone down there. If we zoom out to the 4-hour chart, it's going to say Fibonacci 2618 starts matching up with this lower end down here. That's probably the most it would go. Always check your higher time frames just to see where any other 200 EMA or support and resistance areas are, and then you can make a judgment call. So if you do get in there and you do risk 100 pips, then you're probably looking down to these levels. You can almost make 200. So 1 to 2 risk to reward is possible. If you're going a bit more aggressive, you can put a 50 to 60 pips, and you can definitely make 1 to 3 down to these levels here. But just ride it out. If you have a system in place which allows you to ride out a trade, then by all means do that. Just don't let a winning trade turn into a loser. So if it's fallen enough and you've got enough movement for it to push back, then bring your stop loss to break even. That way you can't lose any money, and then you can push for the higher targets. We always want to try to win at least 1 for 2 and kind of 1 for 3, 1 for 4 if you can. But obviously watch for support and resistance areas. So thank you for that. That was week 44 of the Forex market review. Please visit our website, visit our YouTube or Twitter channels, register, and we'll send you these videos all the time. And thank you everyone for 1 year of us jumping ahead. The official release was in 2016 in January, so there was still a little bit to go before the full 1 year, but this was the week we decided to send out the videos and help others out there for free. We wish you all the best in your success. Take care. Bye-bye.